Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Wednesday, 19th day of August, 2020, and this is the daily report for gold and silver. A sharp, brutal drop in both gold and silver occurred today. This came following Fed minutes that were not favorable in the eyes of some traders towards the price of gold and highly supportive of the dollar. Luckily, we sent out a trade alert last night recommending that we trail our stops up. Stops were hit. We did pull profits. We'll talk about that in detail when we pull up our technical studies. But first, let's take a look at the extreme price drawdowns exhibited today in gold and silver. What a day for gold and silver, with both of the precious metals selling off sharply and the US dollar gaining significant strength, about 0.8%. On the left-hand side, you see current pricing as it stands in Australia. It is after 12 and trading has commenced. 1946.70, down $26.60. However, when you look at this sideboard, this was a screen print that we took prior to the change, and gold closed today at 1934.20. So it's actually up a few dollars from pricing this morning. When we look at spot gold, the current fix right now is 1937.68, putting up about $9.50. The last was 1928.30, so we're getting a more accurate read of that. But it was silver that really took the hardest blunt, down 4.77%, a net decline of $1.34, and it closed at 26.73.5. It is at 26.88. Let's take a look at our technical studies, because luckily we sent out trade alerts last night and we exited with profits on all of our futures trades. Traders, if you recall from yesterday's show, we talked about the fact that as we saw this market moving up, after having this retracement from 2088 down to these lows at 1875, once we started moving up, I recognized that we could easily still be involved in some kind of an ABC correction rather than a one and done, in other words, a straight line down. And so then after the show, I began to look a little bit more closely at the charts and what I had said. And I remembered saying that typically your B wave, the counter wave, would go approximately 75% that of the drawdown in A. But the actual number is anywhere between 50 and 75%, which is this band right here. And when I thought about it in that way, I realized we could easily be at a top, and the best recommendation I could make to our subscribers was at least to raise our stops, and we did just that. I also included 3 charts showing exactly where we entered the trade and where to move our stops. And in essence, what we did is we moved our stop on our December gold futures to $1,979.20. We moved our silver stop up to $26.87, and our Forex gold stop up to $1967.52. We did receive a couple of questions that we will answer, but first I do want to talk about where we believe gold could head in the near future, and in terms of the results from today's trade. All of those will be available in the proper action section on the members page. First, to where we think gold is going. My best estimate is that we are in an ABC correction. We completed this third wave, when the market topped out at 2088, we went into our first correction, which I'm calling an A wave. That took us to roughly 1875. We then began to move up. Once we went into the area between 82 and 2036, I realized that we could be looking at some sort of an ABC correction. I mentioned that on yesterday's show, but when I saw some weakness come into the market that was a little bit steeper than what I had seen, that was right here, I went ahead and I sent out the trade alerts to raise our stops. If I am correct and we do see a continuation of downside, we could see two areas that are logical. The first is simply called an ABC flat. A flat is where your A and C wave have identical lows. The second is what's called a normal zigzag, in which the C wave goes below that of the A wave, and a logical point to look for it is the 38% Fibonacci retracement. We do have a little uptick here, but we could easily see that this wave coming down, this final C wave, is a fractal of what we've been looking at. In other words, it won't be straight down. We'll have a decline, a counter wave, and then yet another decline. Traders, we remain flat with all futures trades, although we are long our electronically traded funds, GLD and SLV, which was a question that I received today, and that is, why do we not initially put stops in for the ETFs? And the reason is as follows. I collect gold coins. I love the Buffalo 24K coins. I collect silver. I look at the ETFs because they have no leverage, much in the same way that I look at physical possession, except that it's offset by paper. Because of that, I'm willing to let the markets move against us because I'm looking at this component of our overall portfolio as a long-term component. If I believed that the rally was over, and that we were headed into a steep and elongated and extended correction, I certainly would have put stops in there. But my sense is we want to hold on to those positions in the same way that you hold on to your physical gold. I hope that answers the question. The other question that was sent in by a subscriber pertains to Fibonacci retracements and how we do them and whether or not we can actually do them by hand. I no longer do them by hand, but it is possible. In essence, what you do is you go from the low or beginning of a rally and you take it up to the top of the rally right here. Once you do that, you will get a series of differential lines at the 23% retracement, the 38% retracement, the 61.8% retracement, and then the 78%
I hope that
answers
retracement.
your question. I have just put up a definition from Investopedia of the screen
what a
for more
Fibonacci
information.
retracement
This
is
has been Gary
and
Wagner.
what levels to
Wishing
look
you
at.
at
Always
you can
good
read
trading.
that right here.
We will talk
but
to you tomorrow
also,
for the next
this is all
daily
derived
update
from the
and
Fibonacci
review.
number
Bye-bye.
sequence, which I have just put up on the screen. It is a very simple sequence in which you add or sum up the first two numbers and add it to the next. So 0 and 1 equals 1, 1 plus 1 equals 2, 1 plus 2 equals 3, and so forth. I hope that answers your question, but please look at the link at the bottom of the screen for more information. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.